Hey there, and welcome to my channel, The Paper Bag Investor. Should you buy Tesla stock at $2,000 per share or higher? That is today's question that we're going to try and answer. So let's get into it. First off, I want to give a disclaimer that nothing in this channel is financial advice. If anything, I want this channel to inspire you to think for yourself, think independently, and make your own investing assumptions and decisions. Everyone's situation is different. The financial situation and position and goals are different. And you need to think for yourself and make your own financial decisions. Okay, now a lot of people think when they see a stock rise so rapidly, parabolically, like Tesla has, they assume that the stock now must come down. And this could be true. There's really no way of knowing in the short term whether stock's going to go up or down. But again, a lot of people assume just because it's gone up so much, so rapidly, it's now going to crash down a certain amount. And if you read a lot of what analysts say about Tesla, many of them will say that it's overpriced, it's overvalued because the shares have risen so rapidly, or because the PE ratios in the 800 or 900s range, but they don't really give much more analysis beyond that. But this kind of reasoning that just because a stock jumps up rapidly, it now means you shouldn't buy it or you should wait for a big pullback, could mean you miss out on great returns. For example, I bought my first shares of Tesla in the 200s, and many people said at that price range it was overvalued, overpriced. And then I bought them again in the 300s, and people said the same thing, that it was overpriced. Again, it soared up, it was at 800, and many people said there's no way it's going higher, it's definitely overpriced now. And I bought more shares then. Again in the 900s, same story, I bought some more then. And then it surged up again earlier this year to 1,500, and people said no way, it's not going any higher. It's going to sit at 1,500 for months or come down significantly. But since the 1,500 range is now surged up in the last 10 days to over $2,000 per share. So how do we know at the $2,000 price that this is the top? Is it going to have a major pullback? Is it going to go higher? And my belief is that there's really no way to know for sure in the short term, the next few months. But if you look out on a longer horizon, 5 years out, 10 years out, you can make some pretty clear predictions and forecasts, and then scale back from that future predicted price to today's price to see, is it actually a good price today or not? So I'm going to show you my math on this. A couple of assumptions up front. We're only going to look at the automotive side of the business, and we're going to split that up into whether Tesla is vehicles only or if they also have a full self-driving, regulator-approved full self-driving software in place. Tesla, of course, also has a solar part of the business and an energy storage part of the business, and those will be significant parts of the business going forward, but we're not going to include those in this analysis. So if we look out 10 years and we assume in this year, 2020, that Tesla will deliver 500,000 vehicles, that's their target, and we'll also assume they have an overall operating cost of $4 billion. So let's look ahead 10 years to 2030, and we're going to make a conservative assumption that Tesla grows 30% annually in deliveries year over year. And this is actually a very conservative assumption because Elon has said repeatedly that he expects vehicle deliveries to grow at maybe 40 to 50% annually. But we're going to say 30% just to be very conservative. Then in 2030, that second line there, you'd have vehicle sales of 6.9 million. And if we assume an average retail cost of $50,000 per vehicle, then the next line you'd have a revenue of $345 billion in 2030 for that year. And now if we assume a gross margin on each vehicle of 23%, then you get a gross income of $79.4 billion from the vehicles. And if we also assume that the operating costs grew at 20% annually, then you have an operating costs of $25 billion, and you have an overall net income of about $54.4 billion. And if we apply some PE ratios to these numbers, now again, these are all very rough numbers, but say a PE of 30 would give you $1.6 trillion market cap, or PE of 40 is 2.2, and PE of 50 at 2.7 trillion market cap. A lot more than the current market cap. But again, these are rough numbers, and this is looking 10 years out, but it gives us an idea of what the company could be valued at. Now we're going to look at the same valuation, but also with the full self-driving robotaxi network that we're going to assume begins in 2025. We're going to assume around that time that Tesla gets it and their vehicles could be full self-driving starting from there. We're also going to assume that only vehicles from 2020 onwards could be part of the robotaxi fleet. So this year going forward for the next 10 years. And if you count up all the vehicles at that 30% year-over-year delivery rate increasing, at the end of 2030, you would have about 28 million Teslas in existence. And we're going to say about 25% are used as robotaxis. Then that's 7 million robotaxis. And also assume that the average taxi can drive 200 kilometers, billable kilometers per day, or 73,000 kilometers a year of billable hours or billable kilometers. And assume Tesla takes 15% per kilometer as profit. Then the income per vehicle would be $11,000, and the robotaxi income total would be $77 billion just from the robotaxis. Now, if you add that to your vehicle income, you have about $131 billion of income for the year 2030. And again, you apply the PE ratios of 30, 40, and 50, which would be give a 3.9 up to $6.5 trillion market cap. And the current valuation of just a little bit over $2,000 per share is $382 billion market cap. So if we look at the very lowest prediction, vehicles only in 2030 gave us a 1.6 trillion market cap, which is about 4 times the current price, or over the next 10 years is 15% compound annual growth rate. And our highest prediction of 6.5 trillion market cap is about 17 times the current price, or 33% compound annual growth rate. Now, going back to our original question, is Tesla a buy at $2,000 per share? Really, in my estimation, if you can buy an investment and for the next 10 years return either 15% per year compounded or 33% per year compounded, that is an amazing, amazing investment. 15% is very good on its own, 33% is amazing. And in some way, these were conservative estimates because we only took 30% year-over-year delivery growth. Elon has said, as I said earlier, he has said he aims for 40 to 50% in that realm, which would give you a much, much higher deliveries number in 2030. It would be more in the range of 20 to 30 million vehicle deliveries per year rather than the 6.9 that we estimated. And of course, there's other areas of the business that we didn't even include in this calculation, like energy storage and solar, that we know that Elon and Tesla is focused and committed to growing exponentially over the next number of years. So overall, again, just want to reiterate that none of this is financial advice. Everyone's financial picture and situation is different, so you should do your own research, think for yourself, and make your own decisions. But for me, would I buy Tesla at $2,000 per share? Yes, I would, because of this analysis. This kind of analysis is what helped me decide that yes, I should buy Tesla at $300 per share, $200 per share, $800 per share, $1,000 per share, and $1,500 per share. And maybe I'll be buying more in the 2000s. So thanks again for watching. You guys are awesome. If you like this video, please give it a thumbs up and subscribe so I can continue to grow my channel and make more content like this. Thank you so much for watching. Until next time, see you later.